If there is any complaint that anybody could have at the current point of time with KPIT after the Q2 numbers, and they seem to be largely in line, and I'll come to KPIT, the quarter two numbers as well, but the complaint can only be that after spoiling investors and shareholders for between 15 to 20% growth every year for the last so many, it seems that FY26 is turning out to be a consolidation year. Would that be a fair way to term FY26?
Yeah, I mean, naturally, the way we have done in last 4-5 years, this year, our growth has been below, that lofty numbers, if I had to say, or even our expectations. And everybody knows the reasons, and we have been coming out. So absolutely, but at the same time, I think if the things I can see for them to cheer is 2-3 things. One is the pipeline building and winning has been consistent. Secondly, this quarter, we have also announced a significant large deal, which probably help us to really build revenue momentum going into the fourth quarter, or especially in the next year. And as we have said that our discussions with the client, there is a positivity, there is a more clarity about tariffs, and we do believe that there is a positive sentiment, but more importantly, we believe that there are tangible opportunities for us to work on next year.
One or two of the notes that I read, Mr. Patil, seem to suggest, at least those analysts seem to suggest, that you are in the middle of a transition from let's say a traditional services-led model to a solutions-led model. You own the solutions, that gives you more IP, maybe better operational metrics and better return ratios over a period of time. And therefore, in this transition, it's natural for a company to go through a phase of consolidation, which may last between 12 to 18 months. How would you respond to this?
I think the way I would look at it, I think specifically in the sector where we are, automotive mobility, went through a significant transformation or disruption, if I had to say, last year or so, whether it is China, whether it is geopolitical, whether it is tariff, whether it is AI, multiple reasons why it happened. And within that, we thought that our long-term value proposition should be much stronger than where we are. And in order to help our client more concretely, I think we decided to change what we are doing, and also, basically improve our value proposition, both through AI, both through a more holistic proposition, more also through really building new practices, and also going into some adjacencies. I think this is how I would put it. It is not only internal transition which has slowed down at all. I think that's not the case. The market has moved significantly, and the market has been very, if I had to say, it has been very soft. But we use this time to really invest and prepare for the future.
In which case, Mr. Patil, would it be fair to assume that because of the external factors, as well as maybe you're using the time to strengthen the internal metrics for KPIT for the future, that therefore FY26, maybe the first half of FY27, if you will, you are the best person to answer that, of course, it becomes the consolidation period with resilient margins, because we are seeing resilience on the margin front, never mind the fact that the revenues are consolidating. Would that be a fair assessment? FY26, maybe first half FY27, you consolidate and then the next leg of growth starts?
I have put it also, I would put it is also that we believe that from the quarter three, you will see a marginal growth. Last 2 quarters, it has been in constant currency growth, it has been a bit negative, marginally negative, though we have been a positive on the growth. But we'll turn that from the next quarter. We'll see even constant currency growth being positive, and of course, so overall growth will be positive. And Q4, I have mentioned that we'll have some meaningful growth. So hopefully, as we go into the next year, we'll have a better traction. I'm not saying it is going to be a hockey stick recovery, but certainly a good way to the growth.
Yeah, I reckon the market setup the way it is, Mr. Patil, won't allow too many companies to have a hockey stick recovery for sure. So that is completely taken into account. Now, you've done some interesting things, and a lot of people write to us, tell us about a lot of things that KPIT are doing in their own mind, which could be meaningful. Now, one of the things that came up, actually just the macro question before that, and the macro question is that while you do what you're doing in order to improve the or remodel KPIT, if you will, for the future, would there be a string of pearls, inorganic strategy that will continue to add layers and verticals and modules of growth to the existing offerings of KPIT?
Thank you for asking that question. It gives me an opportunity to explain exactly what the growth strategy is and how things will turn out. As you have seen this year, we have invested into four major areas. One is the CareSoft, which is largely to cost reduction. Also, in terms of improving the efficiency of manufacturing. Second, we have invested into NDRIM, which is to improve the consumer experience for clients, which is a main reason for them to compete with the likes of Chinese and new age OEMs. Then we have invested into Helm, which is basically getting some more lead into AI and more into autonomous. So the whole idea for us is moving from services to solutions to, as far as possible, take a larger part of the work, and not only what we bring to the table, but also the ecosystem, and put it together a full solution. And the other part is also out of this, focus on certain products which will help us to build some solutions. So I think this is the basically change we are doing. And if you look at the solution part, last year we have more than doubled the revenues from the solutions. So it is now 18% plus revenues come from solution. So we do believe that this is how we will move forward, and it will improve certainly a value to the client, and of course we'll capture that value, and also we'll do more share of the work with the client, while with the productivity of AI and the solutions and the products we have, there will be certain cannibalization of revenue. So this is how we are putting the strategy together. Okay. Now the other part is there are other areas, other adjacencies in mobility, whether it is micro mobility, whether it is off-highway commercial, whether you look at defense, some of these areas, some of the work which we are doing, or some of the clients we are working, they are getting into these areas. That's where we can leverage this solution, and that's where we can expand the market. That's how we are looking at it.
So green hydrogen, sodium ion, etc., all of them for part of opportunity for listed KPIT, or would that be under a separate vertical? For example, somebody is talking about Trentar, right, and saying that Trentar, when it starts, could actually add meaningfully to top line as well. Are there some timelines that you're working with these technologies as well?
Yeah, I think to your point, there are multiple scenarios, and we do continue to invest into technologies. The timing of some of the technologies could be very different. In my opinion, currently looking at the state of mobility and the hydrogen or some other battery chemistry will be a few years down the line. But if you don't start today, that won't come, and then we will get certain revenues in terms of royalties and the other businesses in terms of integration. So we have started all the pilots and etc. But the core business and adoption will happen later. At the same time, many of the other technologies I spoke about, and I would add some areas like cybersecurity, and I'm sure you have seen that how cyber attacks have impacted some of the OEMs. And some of these things those are the areas where will give us immediate return. Not only that, I think we invested into certain specific technologies which for many OEMs who are struggling in the current programs right now to deliver, how we can really help them to reduce that time. And I think that is, again, will give us the opportunity. And the markets, I think I always say that China and some of the emerging markets are a meaningful part of our strategy. I think that will give the business in the meantime.